All right, first up, let's take a look at the Asian markets. The Asian markets have started to trade higher, and this despite increased US tariffs on Chinese goods that are due to kick in later today. Remember, there is a meeting which is currently underway between the negotiators, Robert Lighthizer as well as Liu. So there might be some bit of optimism. The Dow recovered about 300 points from the lows. So let's see how that is taken by the street. Some bit of weakness seen in the dollar yen. The Japanese index supported by Uniqlo owner fast retailing, so higher by about 0.5%. The Korean markets too opened opened lower and now are attempting a bit of recovery led by Samsung Electronics. Along with that, we have the Straits as well as the Taiwanese indices. Both of them should come up for you, sitting with a gain. Now, over the last couple of trading sessions, the SGX Nifty indicated that maybe we would be outperforming the globe in terms of lower cuts. But just as we kickstart trade, the other Asian markets, they are in the green. Let's see how our markets are taking it, because the SGX Nifty over the last couple of trading sessions, while was outperforming, today indicates a bit of an underperformance as against the other Asian peers. Remember, for the Nifty, we've lost almost 500 points, 550 points if you must, from our record level. So let's see what the street does, especially given the fact that there has been a fair amount of selling by the FIs in both cash and index futures. But as trade talks got underway in Washington, Trump said that he received a letter from Chinese President Xi Jinping and that they would probably speak soon.
But I did get last night a very beautiful letter from President Xi. Let's work together. Let's see if we can get something done. But they renegotiated the deal. I mean, they took, whether it's intellectual property theft, they took many, many parts of that deal and they renegotiated. You can't do that. And I'm different than a lot of people. I happen to think that tariffs for a country are very powerful.
All right, on that note, let's get in some opinion from Stephen Roach of Yale University, who believes China's negotiation indicates they want a deal and US should show good faith towards the deal.
The deal was never a great deal to start with. I mean, that's the bottom line. I mean, the U.S. is good at producing high page count. I mean, Lighthizer did a 181-page report last March on this, the allegations, and now he apparently had a 150-page draft of the deal. But the basic elements of this deal, as we best understand it, featured this bilateral trade deficit between the U.S. and China, which is the least consequential aspect of the conflict between us. Technology transfer, intellectual property, cyber, state-sponsored industrial policy. I don't think there was ever any agreement on that. China may change their rhetoric, but they're not going to change their system in response to the pressure from the president. And the president says, well, we don't have to do business with them. China is a critically important source of low-cost goods for American consumers. They're the largest foreign owner of U.S. treasuries. They're our third largest and most rapidly growing export market. China needs us. We need China. And that seems to be missing from the calculus of the so-called art of the deal. China's very focused on economic growth. They don't want to see the growth rate slip a lot. They put a lot of stimulus into the equation. The fact that they sent their chief negotiator, Vice Premier Liu, over to Washington after the latest round of threats indicates how serious they are about wanting to reach a deal. And I think, ultimately we'll show our good faith in wanting to achieve the same. But it's not a one-sided negotiation. It's a two-sided relationship, two-sided negotiations, and we have to reach joint resolution on these tough issues. And, that's China's responsibility. It's our responsibility, too.
All right, he says that they need a joint resolution for this particular trade deal. But let's talk about the U.S. markets then. Wall Street ended well off the day's low, but the S&P 500 and the Nasdaq finished lower for a fourth session as trade tensions ramped up. Remember, U.S. tariffs on $200 billion worth Chinese goods are set to go into effect in a short while from now. The Dow Jones fell 138 points, while the S&P 500 dropped 0.3%, and the Nasdaq Composite lost 0.4%. The Dow had fallen nearly 450 points at its intraday low. CNBC's Rahil Solomon gets us a wrap of all the action on Wall Street.
U.S. stocks finishing lower, though well off their worst levels of the day. The Dow losing 138 points, the S&P off 8, and the Nasdaq down 32. President Trump saying on Thursday that a trade deal with China is still possible, but adding that tariffs are an excellent alternative if a deal is not struck. Trump's remarks came hours before Chinese officials met U.S. trade negotiators in Washington. A new round of tariffs on Chinese goods is expected to kick in first thing Friday if a deal has not been reached. Meanwhile, investors are waiting for one of the hottest initial public offerings of the year. Shares of Uber are set to begin trading tomorrow, but it hasn't been smooth sailing for the ride-hailing giant. The company is set to start trading in a volatile market. Its chief competitor, Lyft, has seen its stock plummet since it priced in March, and Uber has already had to revise its valuation lower than it had initially hoped. And 401k balances have skyrocketed since the market bottom in March 2009. The average balance rose by more than 450%. That is according to a Fidelity Investments report. The average account for millennials rose by nearly 1,800% over the same time frame. And that is the action from the U.S. market. Back to you in Mumbai.
All right, so that was about the U.S. markets. Clearly a bit of recovery from the lows in the U.S. market. At one point, the Dow was lower by about 450 points. At the same time as the Dow was low by around 400 points, the European market shut. So they shut at the low point of the day as fears mounted while the markets were trading. The sentiment continued to be curbed by trade tensions between Washington and Beijing. So we saw nearly a percent shaved off the FTSE, 2%, as well as 1.7% shaved off the French, as well as the German indices. A couple of stocks, they were in focus in the German index. We had the automotive supplier Continental. That stock dipped around 5.5%, while auto parts supplier Hella, those shares were also down by 5%. So it was the auto sector that came in under pressure. The Italian index, however, was pressured by the Italian Banco BPM, that on account of shares falling by about 7.5%, as we saw some miss on the company's revenues.
All right, let's get our focus back on the top story this morning. Additional China tariffs are due to kick in later today, and China has said it will retaliate if the higher levies are imposed. We have Eunice Yoon joining us live from Beijing. Hi Eunice, good morning.
Good morning to you. Chinese state TV is reporting on the vice premier's trip to D.C., and they're portraying a negotiator who's very, very confident. So he told state TV that this time I come here under pressure. This shows the greatest sincerity from the Chinese side. I think there is hope. Now, it's unclear what the vice premier is going to be able to offer during his discussions with the U.S. negotiators, Robert Lighthizer from the Trade Representative's Office, as well as the Treasury Secretary Stephen Mnuchin. All of them are holding a working meeting over dinner at this stage. The U.S. has complained that the Chinese have backtracked on some important tenets within the trade deal, which the Trade Representative Robert Lighthizer has, according to sources, believed that it provided enough of a legal certainty for the U.S. within the Chinese system. However, the vice premier, it's unclear exactly how much he can do in terms of compromises because his status has been downgraded. He's no longer the president's special envoy, but perhaps he doesn't necessarily need to take the lead because President Xi Jinping himself had sent a letter to President Trump in which President Trump had described as a beautiful letter. So both presidents are expected to speak on the phone over the next couple of hours, possibly ahead of these tariffs, who are expected to kick in about 3 hours' time. Tensions, though, likely to remain high between the two because there are, not only because of the tariffs, President Trump had said that they've already started the process to try to raise 25% tariffs on an additional $325 billion worth of goods, but also because there were some other moves from the U.S. overnight. The Justice Department today accused 2 Chinese nationals of hacking into the insurer Anthem in a major data breach. And the FCC, these are the U.S. telecoms authorities, unanimously voted to deny China Mobile from the U.S. market. So I think it just goes to show that even if there is a trade deal, these tensions between the U.S. and China are going to remain for quite some time. Guys?
All right, thanks a lot for that. So that's Eunice Yoon coming in from Beijing. We'll keep an eye out on how this story develops. Thank you for that. But let's also get in a slice of an exclusive conversation with Mark Mobius, who believes that China will be more impacted than the US in these trade negotiations. Listen in.
I think it affects China more than the U.S. because, as you know, China's economy has been very dependent upon exports, although they're moving more and more towards a domestic-led economy, but there's still significantly amount of exports. The interesting thing that's happening is a lot of the manufacturing, the high labor cost manufacturing in China is moving offshore. And I think the government is encouraging that sort of thing. I was in Hong Kong a few weeks ago and talking to the largest manufacturer of baseball caps, and she said that she moved most of her production to Bangladesh. So I think it's a very interesting development that you're seeing, and a lot of people are afraid that maybe the U.S. Prices of consumer goods are going to go up as a result of this. I don't think so, because there's going to be a lot of sources like Bangladesh, Vietnam, where Chinese manufacturers have moved their production.
So, and even if we do see the tariffs kick in midnight tonight up to 25%, do you think that would hit global growth and U.S. growth in particular, or would the effect be marginal?
I think it will be marginal. I think the initial effect, of course, will be very psychological. No, markets may react, but it will be very short term. The U.S. economy is rolling along, as you well know. The Chinese economy is still growing at 6%. If you're looking at a very conservative number, maybe 5%. So I don't think it's going to have a very big impact.
Mark, who gets hurt the most when China feels the heat? I mean, Chinese stocks are down 8% this week on this turn in tone on the U.S.-China trade talks. Where does that reverberate? Who feels it?
The countries in Southeast Asia, in fact, all of the countries in Asia would be affected by this. From Korea all the way down to Indonesia, because China is the largest trading partner for most of these countries. So to the degree that the Chinese are buying less, these countries would be affected.
Who are the beneficiaries, though?
I think the beneficiaries are those countries that can take over some of the manufacturing. So on the one side, let's take Vietnam. Vietnam exports to China, so they may be affected if the Chinese are buying less. But Vietnam is gaining a lot of manufacturing from Chinese companies, and they're exporting, of course, to the U.S. Bangladesh would be a winner. Turkey probably might be a winner. Countries as far as Egypt would be winning.
Back home on Dalal Street, sell-off continues as market falls for the 7th straight day. Both the Sensex and the Nifty ended at the lowest level seen in the last 2 months, and the mid-caps managed to escape with minor cuts, but the banking index, that was dragged lower largely due to private sector banks. Anisha Jain joins us to get us all the market cues that we need to watch out for trade today. Hi Anisha, good morning.
Hi Sonal, good morning. Hi Mangalam, good morning. Well, yes, as you mentioned, it looks like the market is in the grip of the bears. We have been selling off for the last 7 days. And if you look at the Nifty, it has lost over 450 points in the last 9 sessions. In fact, yesterday Nifty broke below the 11,300 mark, was trading closer to that 11,250 and ended close to the 2-month low. Well, the Nifty has already broken below the 50-day moving average. So the next port of call in terms of the support level can be the 100-day moving average of 11,118 and the 200-day moving average of around 11,032. Even if you look at the Bank Nifty, that one also has struggled in the last few days, because over the last 9 sessions, the Bank Nifty is down over 1,100 points. So a lot of weakness in the Indian markets. Now, what are the reasons of this weakness? Well, first up, perhaps it's a global reason that is causing this weakness, the ongoing trade tussle between US and China. Now, on one hand, we have the Chinese Vice Premier, which is in Washington as of now, and the talks are underway, as well as US President Donald Trump talks about how he got a letter from the Chinese Premier and they are going to talk. But on the flip side, there is this impending tariff that is looming large on $200 billion worth of Chinese goods. So it's always been 1 step forward and 2 steps back for the US-China trade talk. So we'll see how this one progresses. Other than that, and more importantly, I think it's the weak earnings that we have seen from the Indian companies, as well as the consumption slowdown that we have been talking about. Now, whether it was Asian Paints yesterday that saw a cut of around 2%, or the likes of GCPL and Kansai, Nerolac and Dabur from the consumption space, or the auto numbers, or the numbers from the like of Apollo Tyres, everything is suggesting a bit of slowdown. Other than that, why we really moved upwards in the month of April was perhaps of the FII's inflows, and that has also reversed numbers. The bar chart was there for you on the screen. Over the last 5 sessions, the FIIs have sold over 3,350 crores. Yesterday itself, the FIIs sold around 650 crores in the cash equity markets. Other than that, we have the election uncertainty. We'll get the verdict only on May 23rd. And the heavyweights are under pressure. So Reliance is 12% off the recent highs of 1,417. We have had big losers this week in terms of Z, Tata Motors, etc. And today as well, the Asia is trading a bit mixed higher. Actually, there has been some recovery after the cuts we saw yesterday. Let's see how the day progresses.
All right, let's see how the day progresses. Anisha, you spoke about a lot of the stocks. What are the other stocks you're watching out for?
Of course, we have a lot of result reactions to deal with, and top of mind is HCL Tech. Now, wherein the revenue growth has been strong in Q4, and the FY20 revenue guidance is also strong at 14 to 16%. We've had a margin miss this quarter, as well as the margin guidance for FY20 has been cut. So largely positive, but not a big bang number coming in. For Dalmia Bharat, however, there is a big bang number coming in because it's strong beat coming in there. The top line has come in at 2,840 crores, and the profit has been boosted by lower finance costs, as well as the tax outgo has been lower. On the flip side, Voltas has been rather disappointing. We have seen no growth when it comes to the top line. The AC segment revenue has declined 6% year on year. And even if you look at the operating profit, that is down about 43% year on year. For PNB Housing, also the net interest margins have declined quarter on quarter, and the loan growth has been declining for the 4th quarter in a row. For Kalpataru Power, however, it's a decent set because the revenue increased by around 30%. The management has met the guidance when it comes to the FY19 revenue and margin, as well as the FY20 guidance is strong, so expect an uptick there. For Indian Overseas Bank, the loss have narrowed. For MGL, the net profit has come a tad bit below expectations, but the bigger disappointment is on the margin front because the margin have come in at 27% versus 32%. Other than that, we have a couple of news points on Reliance, wherein they have bought Hamleys, as well as a lot of result reactions expected today in terms of SBI, L&T, etc. So we'll watch out for all of these stocks and trade today.
All right, keeping an eye on all these stocks today. Thanks a lot for that, Anisha.